to welcome everyone again to the Southern Oregon Business Seminar series we have. This is our first of 6 series, so thank you all for coming in and joining us this afternoon. We do know that the link was giving some issues, so we're just waiting just a few extra minutes than normal. We want to be very cautious with everyone's time, but we are waiting just a few extra minutes here on our first one as everyone gets signed in. We do appreciate everyone for adding those details into the chat. All right, we're going to go ahead and get started. Again, thank you everyone for joining this afternoon, the Southern Oregon Business Seminar Series. This is, again, Series 1 of 6. We appreciate you all taking the time to join us today. A couple housekeeping things. Again, Kim asked if you could put your name and industry. It's a good time to mark it. Go ahead and put everything you can in the chat feature there. If you have any questions, go ahead and put it in the chat, and we will be getting to those at the end of the lecture. Want to thank our sponsors today. This is brought to you by SoReady. My name is Amy. I work for SoReady, and you'll also see Kim on there, my coworker from SoReady. This is brought to you by a grant, and we're here to help with the small businesses. Today's presentation is going to be brought to you by Marshall Doak. He is the director of the SOU Small Business Development Center. I'll tell you a little bit more about Marshall in a second. I do want to let you all know, as participating in today's seminar, there's some added bonuses with the extra sessions that you participate, the 1 through 6. If you participate in 4 of our upcoming 6 seminars, we have fabulous prizes that'll be out there. Kim will list those in the chat if you have more questions about those, but please keep an eye out for the bi-weekly sessions that will be coming out to complete this series. So let's get going. Today's seminar is going to be presented by Marshall. Marshall has worked to build the businesses in Southern Oregon as an operations manager, controller, and a business advisor throughout his career. Through those positions, Marshall has managed a ranging from 1 to 225 employees. He has extensive experience regarding the production and distribution of products and a thorough understanding of hurdles small businesses and people will face in growing their business. His areas of expertise include financial management, operational management, business strategies, and planning transition businesses between the businesses and entrepreneurs. Marshall holds a master's degree in administration from Pacific Lutheran University. I'd like to now turn it over to Marshall Doak, again, the director of the SOU Small Business Development Center, to lead our presentation today. Marshall, it's all you.
Amy, thank you for that introduction. And it's nice to be here today and pleased to kick off this series. And so the intention is to set a standard that will be difficult to match so that you'll enjoy just a wonderful series here with SoReady and the LISC grant that they have obtained to bring all the information to you. So saying that, let's get into today's topic of, are you a business? And so let's start with organizational structure. And interestingly enough, one of the first decisions you make as an entrepreneur, thinking about going into business, actually taking that first step, is that immediately you're faced with the reality that you're forming a legal entity. And so it gets serious immediately. And I think that that's kind of a good theme, that when you step into business, that it is a serious endeavor and it's not to be taken lightly, because the legal ramifications are substantial. And the younger the business you are and the smaller the business you are, the closer to home it can be. And so in some ways, as you grow and develop, the risk is able to be mitigated to a small degree. And so the legal entity piece that you're forming is really what is the business relationship to yourself? And we'll talk a little bit about that with different types of businesses that are formed, formations. And one of the questions you're going to ask yourself is, how much liability can I actually handle? Because liability out there is huge. And if you think that at this point I'm trying to scare you a little bit, then yeah, I'll accept some of that, because this is such an important aspect in your life should you go into business. But how much are you willing to handle? And if you don't want to handle so much liability, what can you do about it on the front end? And so let's talk about that. Who are the owner or owners of your business? Understanding who is part of that business is critical to helping you make the decision of how you're going to form. And along with that, who question is how much? How much does each person own? And how do you measure that? Is it all just money into the kitty? Then it's pretty easy to measure. But when you start mixing, well, it's my effort versus your investment and what it means today, what it means for the work that I've done beforehand to get set up to this point. Is there value there, or what is the value of that? All of these questions need to be answered ahead of time. And while you're getting along with your potential partners, this is the best time to write things down and to get everybody to agree. Once you get further down the road, sometimes it is easy to misinterpret and start different points of view and different controversies, and those are very difficult to unwind. So is your agreement, is it written down? Did everybody sign it? Have you brought in outside experts and counsel to help you draft that agreement? Choosing an organizational structure also has a lot to do with taxation. How do you want to be taxed, and how is that going to affect your future profitability and your future lives? So again, taxation is just a piece of how closely you're formed, how much liability you have. The whole ball of wax kind of works together. And then there are a few issues. Am I able to be minority-owned business, woman-owned business, veteran-owned, disabled veteran-owned? There are a lot of classifications of businesses out there that can confer certain rights. And so those designations, depending upon your business and which areas that you're working in, may confer some benefits to you. In general business terms, they may not be so important. So how you look at using the inherent demographic characteristics that you own can be a factor in how you decide to form. So let's go into the forms of business. And I think that we're next slide. Thank you. Yes, yeah. So the first and easiest is a sole proprietorship. And so that is me. I'm a sole proprietor. I'm in business. I'm using my own name. Very simple. I just took the step and told you that I was in business. Now, by virtue of saying that I'm in business, I'm 99% of the way there, actually, which is kind of a crazy thing to say. However, the missing pieces are, I need to either show some revenue. I could register with the state. There are several different types of metrics that can be used as hard proof that I'm in business. But even if I represent myself as being in business, that's a long, long ways toward actually being in business. Kind of crazy, but that's the way it works. So as a sole proprietor, it's really easy to get into business. I can sign contracts and I can make commitments, and hopefully I'll be able to fulfill them, because if not, then that has ramifications. The downside of a sole proprietorship, the upside is it's fast and easy and cheap. The downside is that the liability that I accrue as a business person can translate into my personal life, because myself as a person, as a head of household, and myself as a business person are really the one and the same. And so they're not separated out. So the liability and the downside of a business can translate into my own personal assets, and can be a substantial concern for me as a business person, whether I even want to go into business. And so separating my business from myself might be one of the first considerations that I would have should I really be a sole proprietor, or should I look to another business form to see how I might be able to separate my business liability away from myself? So that's one of the questions that I would ask. So there are ways to do that. One way would be, the next step would be, well, maybe I'll take on some partners. And so you can have a formal partnership agreement. There are other ways of taking on partners. In essence, if I bring in investors under other forms, in many respects, those are basically partners also. Might be silent, but let's go into a formal partnership as the next step in a possible business formation. A partnership is a formal agreement between different parties. And so we're still on the previous slide. There you go. So sorry, I have that on half the screen, so I'm checking my notes to make sure that I'm thorough here. But the partnership is it's a formal agreement between unrelated parties. So, and it can even be a formal agreement between related parties inside of a household. But certain expectations, the inputs that are brought in, whether it's skills, whether it's money, whether it's time, what the inputs are, how the gains, how the assets are going to be managed, how the profits are going to be distributed, are all part of a partnership agreement. And this is very, very important that this agreement spell out exactly in detail ahead of time to avoid issues further down the road. Interestingly enough, in a partnership agreement, one of the most important aspects are, how do we get out of this? Because getting into a partnership, very much like a domestic relationship, sometimes it's easy to take the step, jump over the broomstick, and you're partnered. But to get out can be quite difficult when you have assets that are in common and you have disagreements in how the assets should be deployed, what markets you should be looking at, how you should be distributing earnings. All of these different types of issues that are not necessarily evident on the front end can become quite significant later on. Life changes, even with the best of intentions, life changes in unequal amounts between partners. And sometimes when an agreement looks good on the front end, 5 years later, it may not look so good to all parties. And so preparing your partnership for how to dissolve, how a partner who wishes to exit can be purchased out. All of these types of issues can be put together in a legal document and confirmed by all parties going into it, so that there is no acrimony, that there is no difficulty in having somebody exit or bringing in more partners even. So there is the partnership is fairly easy to get into. You do need to have that agreement on the front end, but you do get the ability to add different skill sets and different energies between partners. And so one person doesn't have to try to cover all bases. Now you have partners that can each take a piece. You might have a great R&D person, couple that R&D person with a great organizer or a marketer, and you have a wonderful management team just in your ownership all by itself. And so that's one of the great things about having partners come on board, where you're able to add talent, and with those talents, you can move your business forward much, much more rapidly. One major downside to a partnership is that between partners, there's unlimited liability. And so myself as a partner, I have the unlimited liability for any of the goof ups that any one of my partners might do that would cause harm to the business. We have to cover it, and it may come out of personal funds. Likewise, anything that I do that's goofy, that causes harm to the partnership, still has to be repaid by my partners if I'm unable to make that good. And so that unlimited liability can be quite significant. So that's one of the concerns with a partnership, and knowing who your partners are. It's not a casual engagement. And the last area, and this is common in many, many organizations from this point on, is that as you start bringing people together and you have multiple owners, then defining what that ownership role is. Let's just say, for example, we have 3 owners and it's all equal parts. As employees, even if we're all 3 employed, you might have a CEO who has a higher compensation level than a marketing director or an operations manager. And those might be the 3 positions that you've agreed on. So who gets which position and which salary level? And so as you start building a corporation form, if you will, or at least a very sophisticated management structure, then these concerns can come forward where you might have even ownership, but the CEO has the rights to make the decisions, and the other partners can go into the partnership meeting and voice displeasure, but they can't out on the production floor, out in the general business, because they work for the CEO. So the relationships are different between owners as partners and employees as workers, completely different, even though they might be the same people. So the next area that we'd like to look at are LLCs. And LLCs are limited liability companies. And these are formed under state law. If you recall, we talked a little bit in the sole proprietorship area about the unlimited liability, all the reasons that you might not want to go into business because I have unlimited personal liability for business problems. So the LLC is an attempt to cure that in terms of limiting the liability by statute. And so if I form an LLC, fairly simple to form, it does take a little more paperwork, not excessively so, a little bit more money to register your LLC. It has an identity separate from me as an individual. It has a name. Then that if I manage according to the law, meaning that I keep my personal assets and my personal business completely separate from my LLC as a company business, then I enjoy the protections that are given me under the law. And as long as those two are separated, then I can operate my LLC and enjoy a certain amount of immunity if my business has a problem and there's a lawsuit and I'm found guilty or in error and need to make compensation. It is limited to the value inside the LLC. And if that doesn't satisfy the judgment, then under the law, my personal assets cannot be attached as part of that lawsuit. So there is some immunity from being held liable to the fullest extent of what the damages might be. So that's really the main protection for an LLC if managed correctly. And that's really a great way to mitigate some of the risks that you would take on as a sole proprietor. And so for many reasons other than this, but simply that by itself is usually adequate for people to seriously consider forming as an LLC at the start. The LLCs are not a tax election. And so that's a whole separate, taxation is a whole separate issue to this. It's solely for limiting the liability. And again, interestingly enough, as an individual working for yourself in an LLC, you as an owner have a different point of view as you as a operator or a manager might have. And so that sounds kind of silly, but if you have a multiple member LLC, meaning that you have 3 or 4 owners, if you will, then the members as the management or the board of directors have a viewpoint, and you as a portion of that board have a viewpoint, but you as an operator doing a particular position inside the LLC would have a whole different viewpoint as an employee. And the final form of business that we'll talk about just real quickly is corporation. Corporations are usually 2 types. Even the vernacular on the street is that there are 2 types of corporations that are typically discussed, although there are many other forms. Typically, S corporations or simple corporations are formed, and C corporations are formed. Those are the 2 most popular elections. The S corporation or simple corporation is more of a way that taxes are held, even though you do have multiple owners and limited numbers up to 100 of owners that can have stock in that corporation. There is a formal board of directors. There are director meetings, minutes that are part of that. And a little more involved than an LLC for management, not necessarily excessively so. A little bit higher on the scale is C corporation. The C corporation is a completely separate entity from any of the owners. The owners have a piece of that corporation. Typically, the liability for those owners is limited to their investment. And so the corporation takes on its own life to grow, expand, fail, whatever the future holds for that corporation. The corporation is a complete separate entity. The C corporation is a complete separate entity from any of the owners in the eyes of the IRS. And so it's taxed as an entity upon itself. So the profits are taxed. The resulting earnings are then distributed to the owners according to the distribution plan or according to what the board of directors determine is appropriate for that quarter, that half year or year, whatever their cycle is. And so this rises to the fact that the earnings are taxed once in the corporation, and then the distributions are taxed a second time when they accrue to the owners. That's when you hear that, oh, I don't know about C corporations because it's double taxation. But anyway, that is, wow. So I asked Kim to catch me if I digressed, and she had just told me that I do need to speed it up, but fortunately, we'll be there. So let's talk a little bit about business naming, because business naming is really kind of interesting that it can be descriptive of the operations. It can be used to elicit a response in terms of emotional response that, hey, this sounds really cool. I want some of this. I don't know what it is, but let me investigate. They can be used to draw people in other words. But the business name is important because you need to have a business name when you register your business. Again, sole proprietors, you can use your own name and you can go for that and not have a problem. If you want to use a third-party name, then you do need to see if you're able to register that. And so the advice is to go to the Secretary of State's office, do a name search to make sure that it is available and that you can use it so that you do not infringe on anybody else's rights. The business name is important so that when you register with the state, then you can go to your bank and establish a checking account and establish your business with its own separate accounting. Banks typically do not register businesses without going through that step. The Secretary of State's office in Oregon handles all the registrations and the record keeping for the business registrations. So when you do your search and pull up the different listings, make sure that you see that if it's a name that you want to use and it pops up, check to see if it's active or inactive. If it's inactive, then it is available and you can register that name. So start with a search and then register your name, then go to your bank and get your checking account and you're there. Pretty simple. One other aspect is when you register as an LLC or a corporation or a partnership and you're able to use that name, no other registration is required to maintain that name. That particular document that you use to register is sufficient. If you're a sole proprietor and you want to use a third-party name, for example, I would like to sell handicrafts and I would want to use Creative Handicrafts. If that name is available, I myself as an individual can purchase that. And that's a DBA, that would be Marshall Doak, doing business as Creative Handicrafts. And I can register that name. That name registration is sufficient to hold the name that I can use, even though I'm not necessarily registering Creative Handicrafts as a business. I'm just running it as a sole proprietorship. So you can still tie the name down and you're still required to if you want to use it, or it's open to somebody else and they can bump you from and keep you from using that in the future should they decide to register it if it's open. So one way to protect that name is to register it as a separate registration. It's $50 a year in Oregon to register it as a DBA or doing business as that particular name. So maintaining legal operational status is the third issue that I wanted to talk about, the third category. And fairly simple, you need to maintain your registrations, starting with the federal EIN. It's an employer identification number. That gets you started as a unique entity in the eyes of the federals, the feds. And so it's a one-time registration. It's a lifetime number as long as you maintain your business. And it's free and it takes a couple days, so it's not that big a deal. It gives you the ability to have a unique identifier away from your TIN, your tax identification number, or your social security number. And so that's important, especially later on if you decide that you want to sell or transfer your business, then you don't have to disassociate it from your social security number. It's already recognized as a separate entity in that respect with the government for tax purposes. The state has a number that's very similar to that. It's a BIN, it's a business identification number. However, a different set of rules are attached to that. And so with the state of Oregon, if you register a BIN, you're telling the state that you're going to be employing people. And that's the way that it's viewed in the eyes of the state. So the Department of Revenue encourages you highly to not register for a BIN unless you are going to be hiring employees. If not, then forego the state BIN registration. You'll still want to register the business with the state Secretary of State's office, but avoid the BIN, at least for the time being, until you have employees. Other registrations and licenses typically are with cities. Counties don't issue licenses. Not all cities issue licenses. Usually the major cities, the larger ones that have the staffing adequately do that, having the zoning in place to enforce, so that they do like to keep track of business licenses to make sure that you're in conformance with their zoning and other requirements. You don't generate too much traffic. You don't have noise and litter and late night hours in residential areas and those types of things that they want to be able to enforce. And so they're interested in knowing where your business is and where you're planning on locating to make sure that it works with their statutes. So contact your local city to see if they issue business licenses. And other licenses, typically, if you're in the restaurant industry, food preparation, then the health department, you'll need licensing for that. If you're shipping agricultural products in between state lines, you'll be needing to be licensed and inspected to be able to ship. Many of the professions, skilled trades, have licenses that are required, testing procedures to make sure their competencies, so that you'll need to contact the Secretary of State's office. Business Oregon has a lot of that information. We certainly help with a lot of those types of issues to help steer clients to the right areas to where they can obtain those licenses and become legal to practice in the state. If you are planning on having employees, then you do want the BIN with the state, and then you do need to know the rules on what it takes to legally employ others in the state. And so the Secretary of State's office, they print a Oregon Employer's Guide. I highly encourage you to download that. You'll be looking at how to pay wages, all about tax withholding and remitting those taxes to the state, the period that you need to accumulate, the periods that you need to report, how much can accumulate before you need to pass it on. There are whole sets of rules around that. You'll need to look at workman's comp, making sure that you have workers' comp policy in place. You'll be working with OSHA, Occupational Safety Health Administration, BOLI, Bureau of Labor and Industries. You'll have a number of agencies that'll be very interested in your business to making sure that you're complying and providing a safe workplace for your workers. So there'll be postings for different types of materials that you're using in production. And finally, but not least, very important that you look at business insurance. There are a lot of needs for your own liability protection. That's part of the one of the smartest things that you can do is protect yourself with liability protection. Property damage, making sure that your assets are covered. So in case that there are issues, that they can be replaced and you can remain profitable, you can remain in business. There are specific industry requirements sometimes for insurances. And finally, automobile would be one for travel and whatnot under general liability, but the specific industry requirements can be different types of specialty liability insurances for certain types of hazardous materials, for example, or bonding. Very, very normal would be bonding, where you have both insurance for general purposes and bonding to protect your clients from operations when you're working on their property. Finally, and then even if you are only providing services of an intellectual nature, you may want to be looking at E&O policies and D&O. E&O, errors and omissions, are professional liabilities, so that if I make a mistake and you are harmed, then I am protected should you sue me for giving you bad advice. If I forget to tell you something that was critical, same thing, you can sue me for forgetting to tell you that you shouldn't be doing that. Then I'm protected through the E&O policy. And if you have a board of directors, this is for nonprofits as well as for-profits. D&O policies are extremely important. You want to make sure that your directors and your officers are covered with liability policies so that they're held harmless. So as a result of their decisions, if something goes wrong and you are involved in a lawsuit, that they are protected personally. It's pretty hard to get a board of directors to agree to help you, mentor you, and participate if they have open-ended liability into the business. So it's important that you protect them when you are starting up and trying to conduct your business. So with that, those are 3 areas that we've covered today. Just as a very quick once over the top, we do have a handout for you that will be transmitted to you either right now or shortly, and be more than happy to take any questions that you have.
Right. So I wanted to mention that, through the past year, there have been a lot of grants that have come through, and SoReady has administered a lot of those. One of the very, very first things that we check for eligibility is that legal business operating status that Marshall was mentioning, just to make sure that you are currently operating and that everything is registered properly. So one of the best things I could do is encourage you to, for all of your startups or anybody who's already in business or looking to start something up, is to get registered and make sure you maintain that. So another question that I had, Marshall, I'll ask you this question, but please, audience, everybody who's attending, if you have questions, please type them in while Marshall answers. Marshall, what does it take? Let's say I am a sole proprietor. Can I operate as Kim's Consulting? Does that automatically make me a sole proprietor, or what else is required?
I'm sorry, you did cut out for just a little bit. And so you're operating as a...
Let's say I'm going to operate a business and start up a business as Kim's Consulting.
Okay.
Do I need to do anything else to be a sole proprietor?
Amazingly enough, you don't have to do a lot. If you're using your name, Kim Young, then you are in business. You still need to pay your taxes. Sorry, but you'll still need a Schedule C, and you'll still want to have a set of books as if it was separate from you, because you'll have self-employment tax on the earnings, as well as, so the self-employment tax is both sides, the employer side and the employee side. And many times it's a real revelation to new entrepreneurs as sole proprietors. Oh my gosh, the tax rates are so horribly high. But that's, you'll be needing to pay both parts. But other than that, you're ready to go in. If you do want to say...
Oh, I did hear you say I needed to use my last name. Does that have to be in the name of my business and on the checks I receive?
That's a great question. I don't know how to answer that, so I'm going to say no. I think that you may be able to use just your first name, Kim. And so I don't know what that means. It could be, if you put periods in between it, that's a formal name and you'll need to register it. But if you use just your first name, you might be able to get away with that. That's very interesting. To my knowledge, there is no formal requirement that full legal names be used. I don't know that it's that tight. So I'll open that to the audience. You might have already dealt with that, somebody in the audience. But I think I'm looking at chat here, so I'll answer Courtney's question in a moment. So if you do want to go under Young's Consulting, then that's a formal name, and you will need to register that name separately to maintain your sole proprietorship status.
Okay, great. So yeah, let's move into the questions in the chat. Jan, who works in real estate, wants to know if we will meet with her to make sure that we have taken all the proper startup steps. And yes, SoReady is certainly available for that. But we invited Marshall here because he's with the Small Business Development Center, and And that is one of the services that he specializes in. So Marshall, could you do a quick overview of some of the SBDC services?
Certainly can, Kim. Thank you. One of the services we do is what we're doing right now. We try to educate budding entrepreneurs for what the legal environment is, what they're getting into, and all different types of issues, development issues throughout the life cycle of the business. Second thing we do is, we don't know everything. I freely admit that because it's so complex and changing daily. And so if we don't know, we'll access already, we'll access other SBDCs, we'll access and send you on to the private business community so that you get the answers that you want and need. We do a lot of connections to certain programs such as government contracting, et cetera. But really what we're known for is the one-on-one private consulting where we work on specific business issues with you. So those are the three things that we do as a group. And it's pretty open-ended inside of those categories. It's working with businesses on a personal basis, one-on-one.
What do you charge for that service, Marshall?
Well, for the one-on-one, their flagship services, we are paid for through public funds. And so as long as businesses are working to improve themselves, then we're there with you. When you lose interest, so do we. We are busy and we help those that help themselves. And we will stick with you. And some of our clients have been with us for several years and are continuing to develop businesses. Some come in and then they leave for a while, and a few years later, they're back again. And when new issues are encountered. So we're available to you and at your convenience. So
Great. We will send out Marshall's notes and his contact information after that. Certainly we are so ready, are happy to help you. If you are an entrepreneur, Marshall and the SBDC team, they are the specialists at helping you get that business plan up and running and really partnering with you through that as well. Another question here, we've got a couple more about labor and staffing. First question is about getting a BIN number. If you don't have regular employees, maybe it's just periodic, do you still need a BIN number? And if so, or I guess if not, if you don't need a BIN number, how would you pay those people?
And so the BIN is required when you hire. And so that act of you hiring as the employer of record is the determining factor for that. And so, yes, you do, even if it's occasionally, which can be quite painful, filling out quarterly forms, especially you might even have a seasonal business. And so 2 months of the year we have help and 12 months of the year we report about it. That's kind of the way that works, unfortunately. If you have what you think are employees, but I called the temp service and they sent out a bunch of people and I cut a check to the temp service. Well, legally, the temp service, the temporary service, is the employer of record. They need the BIN. You have a contract for them providing you labor at a fixed rate, and they'll send you a statement. You're not the employer of record, so you do not need a BIN number when you go to a third party employer, if you will, like a temp service. And the real kind of the sticky point here is that, well, I brought people in and they are acting as their own contractors and they're their own business. And so I'm issuing them a 1099 at the end of the year. And so therefore I'm covered and they are independent contractors. Well, the IRS and in Oregon, the Bureau of Labor and Industries have a test for, is somebody an actual 1099 contractor or are they employees? And so it's not necessarily a pass-fail each aspect of it, but as an aggregate total, it is either you're going to be the employer of record or you're going to be hiring an independent business. And so be extremely careful here. 85% of the complaints received by the IRS are the fact that an employer thought that they were hiring another firm and issuing a 1099 as a contractor. Well, that firm that individual went out to the casino and lost their money, didn't pay the taxes. So when the IRS came after him, they said, wait a minute, I'm not a contractor. I'm really an employee. I work for Kim. Sorry, Kim, I had to pick on you, but I work for Kim. So the IRS will come after Kim and ask, well, you're the employer, where are the taxes, where are your returns? And so it's up to you to prove that that other entity was actually a business and not an individual. And that is where again, 85% of the problems that businesses have with casual labor is the fact that in reality, they have hired an employee, but have tried to pay them as a contractor. And so the IRS is on top of that and will ding you severely for it. So make sure the test will be more than happy, either directly or through Soretti, to give you information how to find that information so that you can reassure yourself that you're actually hiring somebody as an entity and not as an employee. We have oh, thank you, Kim. Yes, yeah. The SBDCs are nested in the community college system. They're throughout the state, also at Eastern Oregon University and Southern Oregon University. So there's one near you, and we'll be happy to contact you with any of them, as well as ready. So thank you for that question.
We will get
Marshall.
out the SBDC contact information, and also we'll work on getting some CPA recommendations over for you as well. So I'm going to have Amy give some closing remarks, and then for anybody that wants to do some one-off conversations, I think Marshall might be able to stick around for an extra couple minutes, and we will stay around as well. Go ahead, Amy.
I just want to thank Marshall Doak for being available to lead the conversation today. I want to thank all of you for joining us, and a reminder of our next session. It's up there on the screen, which will be May 5th. Are you making money? This is a community event, and we will be rotating the presenters and the topics. So please make sure that you RSVP for the next session. The attendance account helps us kind of get prepared. The Zoom link for those of you who do sign up will be in your confirmation email. But to avoid confusion, we will be sending out next time calendar invites with that link, so we don't have some of the difficulties that we had today. So we do apologize for that, and thank you all for jumping on and joining us. So if that is all, we want to really extend our thanks again to Marshall. Thank you all for giving up your afternoon. We hope it was valuable information. We look forward to seeing you again on May 5th. And with that, we will sign off. But if anybody needs to stick around and ask some questions of Marshall, we will stop recording and we'll go ahead and open the floor up for that. But for this ends our first session of the Southern Oregon Business Seminars, and we'll see you next time.